We're at the Grant Thornton ANZ post federal budget SA economic update entitled SA Business in a Changing Landscape. I'm just with our panellists. Firstly, Joe Masters, who's a senior economist with ANZ, Victoria Angove, who's the joint managing director of Angove Family Wines, and Yang Wan, who's the tax partner at Grant Thornton. Welcome. Firstly to you, Joe, as an economist covering the country and several industries or multiple industries, how's the SA economy faring compared to our counterparts?
Sure. Well, obviously in the last few years we've seen South Australia underperform states like New South Wales and Victoria, which have been really the engine of sort of national growth. But actually, encouragingly, in the last couple of quarters, we've seen some signs that economic activity is accelerating in South Australia. And in fact, in our ANZ Statometer, which takes a whole range of economic indicators, we just released the March quarter Statometer, and that showed that the South Australian economy had not only continued to improve, but is now sitting with above trend growth and still accelerating.
And in what areas do you see the growth opportunities in the next 12 months?
If we look at jobs growth in South Australia, over the last year, the healthcare sector has been the biggest employer of new jobs. Now, that's actually true across the nation. What's quite unique in South Australia, is around agriculture. So quite strong jobs growth in the agricultural sector, and I see that as a real opportunity.
Good. Yan, can I just pass to you on the budget? What are the implications for business and then specifically South Australian businesses?
I think the main focus for us has been the individual tax cuts. So the government has targeted people who earn between $100,000 and $200,000 to basically reducing the tax rate from the 37% tax rate down to 32.5%. What that means is for each of these people, the tax benefit to them could be anything from $1,000 to $7,000, depending where they sit in that 100,000, 200,000 scale. So that's in itself is important because in South Australia, a lot of the successful small business owners tend to take home money to survive, and if they're doing quite well, they'll be earning that bracket. It's also important for them because it's not just business owners who get the tax cuts, it's their customers too. So the more money to spend, the more the economy will benefit. Now, South Australia contributes about 7% of the taxpayers, individual taxpayers, and the government yesterday actually in Senate's in the lower house estimated that the overall tax benefit of these cuts will be about $146 billion over 10 years. So we get our 7% chunk of that money. You can quite easily see it's a big amount of money for business and consumers in South Australia.
On that basis, are you confident with the basis of the South Australian economy and the outlook?
I think things are looking really encouraging, absolutely. There's a very positive sentiment. We've had obviously a government change and that's brought with it a lot of promises and now we need to see some delivery. The wine industry is critical to South Australia's health. We employ around 9,000 people as an industry, let alone the multipliers that come by from tourism, from other suppliers of services to the wine industry. And we are very optimistic about the state of the international wine opportunity for South Australian wine. Internationally, we have got a situation where demand is growing beyond supply. It's never been healthier than it is today.
What else can government, industry, partners of business do in the current environment to support, in your case, the wine industry? You've touched on the MDG, but what other support can those parties provide to your sector?
There has been a lot of tinkering around the edges in our tax system, and it's been 20 years since the GST was introduced, and it was a brave move, and I think we're really lacking leadership in that tax reform discussion.